Live from Nasdaq's global headquarters in Lower Manhattan, this is Advisory Live, brought to you by Nasdaq Corporate Solutions. I'm Will Briganti. Joining me on today's program is Adam Lazarus. Adam, thanks for being here.
Pleasure to be here.
Great to have you back on. For all of our viewers, Adam's probably a familiar face. He's a advisory services analyst with Nasdaq Corporate Solutions. Now, before we dig into today's episode, you're probably wondering why the two of us are wearing New York Mets jerseys. Well, you're looking at two New York Mets fans here.
Die-hard Mets fans.
Die-hard Mets fan, that's right. So we're celebrating the opening week of the Major League Baseball season. We're obviously hoping that the New York Mets go all the way, at least maybe with 100 wins this season, right? But we're off to a good start. We're second place in the NL East. Pretty strong showing from Noah Syndergaard on the opening day, right?
Hopefully, yeah. Hopefully we stay healthy, and that'll at least try to get us into October. So
Right.
it was a solid opening, and we'll take it from there.
That's right. Well, most important part is we are ahead of the New York Yankees overall.
Absolutely.
So, all right. So let's hope we can keep that momentum going. Now, let's dig into the markets. Obviously, Q1 just ended. It just ended last week. To start off, for some of our viewers, can you give us an overview on some of the highlights that kicked off the year?
Sure. So the markets had a great first quarter to start off 2017. The Nasdaq Composite was up almost 10% for the quarter. We saw almost 109 trading sessions in a row with less than a 1% move in the S&P 500. The Fed raised interest rates and is promising to raise them 3 times for the year. And soft economic data such as consumer confidence is at a 16-year high, and gold was higher, almost 8%.
Right. So obviously, those are some of the areas that performed well. What are some of the areas that didn't necessarily perform so well at the start of the year?
Well, we had the U.S. dollar trade, which was down for the quarter. Oil was also down roughly 10%, and it is teetering around the psychologically important $50 per barrel threshold. We also saw hard economic data such as PMI readings and factory orders and durable good orders come in weaker than expected. We saw the VIX and natural gas actually down significantly. Natural gas was down because of the modest winter.
Right, of course. All right, so that's a good start. You mentioned hard economic data and some soft economic data. So can you explain for our viewers what the difference is between those two?
Sure. So soft economic data is a perception from survey respondents for data such as consumer confidence or business sentiment, which both have been up significantly since the election on the promise that we will see tax reform and deregulation. Hard data is actual facts, numbers. So for factory orders or durable good orders, those are actual numbers compared to soft economic data, which is perception. But what usually happens is soft economic data does transition into hard economic data, but unfortunately that hasn't happened just yet.
Sure. Okay.
So, and of course, with consumer confidence, it's at a 16-year high, which we haven't seen since right before the dot-com bubble.
All right, well, Adam, obviously for some of our viewers, we had a little bit of a technical issue there, but we're back on. So,
right.
Okay, let's keep the lights running. All right, so you did mention that some of the data has been mixed, and before we started, you did want to make a comment about the Federal Reserve. So
yes, so I wanted to go into discussion about the latest updates from the Federal Reserve.
Right, and the minutes from the earlier meeting from the FOMC were just released yesterday.
Yeah. So when the FOMC came out yesterday with the latest meeting minutes, they talked about how they are looking to later this year start to unwind their massive balance sheet. Currently, it's over $4.5 trillion, and it's made up of treasuries and mortgage securities.
Right.
Now, the market has already factored in 3 interest rate hikes this year, but they really haven't factored in the unwinding of this position. So with the unwinding, we will likely see some upward pressure on interest rates. And when they unwind, it'll also act as a hike or potential multiple hikes based on how much they decide to unwind and how fast. Now, we also learned from the minutes that when they are unwinding, they are not factoring in with their models any potential changes in fiscal policy that Congress may enact in the coming year. So they're completely different. So we're just going to have to monitor that.
Yep.
And also with the Fed, we recently had 3 resignations which need to be appointed. It's to the Federal Board of Governors of the Federal Reserve. which President Trump will be appointing as replacements in the coming months.
Great. All right. Well, thank you so much for that overview. So before we close, we're obviously looking into the second quarter that just started. What should our viewers be taking note of as Q2 ramps up?
Sure. Well, to start off the quarter, we have seen the Nasdaq Composite continue to hit new intraday highs on the strength of Amazon and Tesla, which just passed the market value of Ford.
That's right. So both Nasdaq listed Tesla surpassing Ford Motors in terms of market cap.
Yeah.
Pushing the Nasdaq Composite higher yesterday.
Yeah, which is big just from the company perspective also.
Sure, of course. Yeah.
So also in the second quarter, besides the news out of the Fed, we're going to monitor to see if healthcare reform is back from the dead. Mm-hmm. If they do repeal and replace the Affordable Care Act, then they can concentrate on tax reform, which has been the large driver of the market since the election.
Right.
We also have the French presidential election coming up at the end of April, which could adversely affect the broader markets and foreign currency, especially if the far right-wing candidate Marine Le Pen is to win. Also, next week is the unofficial start of earnings season for our Q1 earnings. And we are going to continue to watch soft economic data to see if it does transition into hard economic data, which will show that the economy is growing at a faster pace than it currently is.
All right, obviously, so our viewers would need to keep a watch on some geopolitical activities as well as the markets, and then obviously how the sectors perform as they release their quarterly earnings this month.
Absolutely. So we have many drivers, and we have macro news to look out for. So it's going to be an exciting spring, and
great.
Hopefully the Mets will be winning, and we pay the gas bill to keep the lights on.
That's right. All right, well, we do hope the Mets keep winning. Thank you so much, Adam, for joining us, and thank you to our viewers for joining us on today's program as we celebrate opening week for Major League Baseball. We're certainly excited about the New York Mets. And what's the cheer?
Let's go Mets!
We'll see you next week. Thanks so much.